Tonight, we're witnessing a seismic shift in America's energy landscape, one that could have ripple effects far beyond California's borders. The Golden State, long known for its pioneering spirit and economic might, is now at the center of a dramatic energy upheaval. Valero, one of the nation's largest oil refiners, is closing its Benicia Refinery, a facility that has been a cornerstone of California's fuel supply for decades. In a move that's sending shockwaves through the industry, Valero is spending a staggering $1 billion just to shut it down, an unprecedented sum that underscores the magnitude of this decision. This isn't just a routine business move, it's a pivotal turning point that could reshape California's cost of living, energy security, and even the daily lives of millions. With gas prices already sky-high, the closure threatens to push costs even higher for families and commuters. The closure, coming on the heels of Phillips 66's similar exit, marks a major retreat by oil giants from a state they once helped build. It signals a new era, where the traditional energy industry is rapidly shrinking in a place that was once its stronghold. Valero points to California's soaring operational costs and some of the strictest environmental regulations in the country as key reasons for its departure. This highlights the growing disconnect between the state's ambitious green policies and the complex realities of keeping energy affordable and reliable. With California already facing the nation's highest fuel prices, losing a key producer like Valero is a critical blow. Experts warn this could lead to even tighter fuel supplies, more price spikes, and increased pressure on consumers and businesses alike. The big question now: how will California fill this widening gap in its energy supply? And what does this mean for families, small businesses, and the state's entire economy as it tries to balance environmental goals with everyday needs? Let's dive in and explore the far-reaching consequences of Valero's shock exit. California's oil refineries once powered its rise, fueling cars, jobs, and entire cities. But as environmental concerns grew, the state imposed stricter regulations and required unique, cleaner-burning fuels. These rules improved air quality, but made refinery operations costly and complex. Over 40 refineries have dwindled to just a dozen, with each closure tightening the market and raising vulnerability to price shocks. Valero and Phillips 66 are only the latest to leave, accelerating a decades-long trend. With California aiming to phase out gasoline vehicles by 2035, oil companies see little future for their core business here. The state now faces the consequences of its pioneering but disruptive energy policies. The recent closures of the Valero and Phillips 66 refineries mark a major turning point for California's energy landscape. These facilities have long been pillars of the state's fuel supply, processing millions of barrels of crude oil each year to keep cars, trucks, and businesses running. With both refineries shutting down, California will lose nearly 20% of its total refining capacity almost overnight. This is a dramatic reduction, and it's one that will be felt across the entire state. California, already known as an energy island because it's geographically isolated from other major fuel markets, now faces an even greater challenge. The state must increasingly depend on fuel imports from distant refineries, making its supply chain more expensive, more complex, and far more vulnerable to disruption. Tanker shipments are not only costly and slow, but they're also subject to a host of unpredictable risks. Storms at sea, congestion at busy ports, or even problems at foreign refineries can all cause delays or shortages, sending prices sharply higher in a matter of days. Energy experts warn that, in a worst-case scenario, gasoline prices could skyrocket to $10 or even $12 per gallon, levels that would have been unthinkable just a few years ago. For many Californians, this could mean tough choices at the pump. State officials are urgently working to stabilize the fuel supply, holding emergency meetings and exploring new strategies. But despite their efforts, the market is undeniably tighter, and the margin for error is shrinking. Valero's plan to convert its refinery into an import terminal is a stopgap measure. While it may help bring in more fuel, it also means California will be even more dependent on external sources, with less control over its own energy destiny. As the state enters this new and uncertain era, everyday consumers are on the front lines, facing long lines, higher prices, and growing anxiety about what comes next. The risk of sudden price spikes and fuel shortages is now a constant concern for Californians, making the future of the state's energy supply more unpredictable than ever before. Higher gas prices hit California's families and businesses hard, acting like a regressive tax. Long commutes and limited transit options make many especially vulnerable. Rising transportation costs ripple through the economy, driving up prices for goods and services. The logistics industry, vital to the U.S. economy, faces higher fuel bills, threatening California's competitiveness. Local economies lose high-paying jobs and tax revenue, deepening the impact. Politically, soaring gas prices are a powder keg, putting pressure on leaders to balance climate goals with economic pain. California's growing reliance on global energy markets now exposes it to international risks and volatility. Valero's exit has ignited fierce political debate. Critics blame California's aggressive environmental policies for hurting the economy and working families. The Newsom administration defends its strategy, calling the transition necessary and pointing to new oversight of fuel markets. The fight is now between those urging a slower, more balanced transition and those pushing to accelerate clean energy investments. Business groups want to stabilize supply. Environmental advocates see refinery closures as progress. This clash will keep energy policy at the center of California's political arena for years to come. Energy experts warn that losing a fifth of local refining is a structural shock. California's isolated market means any supply disruption hits hard, and higher prices are the new normal. Remaining refineries gain market power, raising concerns about price gouging and consumer protection. For oil companies, leaving California is a rational move. Why invest in facilities destined to become obsolete? The trend of closures is likely to continue, increasing dependence on imports. The key question: how fast can California build out clean energy and reduce gasoline demand? Until then, consumers face higher costs and greater risks. The state's energy future hangs in the balance. California's refinery closures are sparking a national debate on energy security. Critics warn that relying on imports weakens both state and national security, especially for military operations. They argue domestic production is vital for sovereignty and defense. The Newsom administration counters that true security comes from renewables and energy independence, not oil. Every electric car and solar panel, they say, reduces vulnerability to global turmoil. The core question: is energy security about more oil or less dependence on it? California is forcing the nation to decide. California's bold environmental policies are driving a sweeping transformation across the state. These policies are not just statements on paper. They are actively reshaping industries, communities, and the very landscape of California. From the halls of government to the streets filled with passionate protesters, the commitment to a cleaner, greener future is visible everywhere. Regulations like the low-carbon fuel standard and the ambitious cap-and-trade program have made traditional gasoline production increasingly expensive. This has forced companies to rethink their strategies, pushing significant investment into clean energy technologies. These policies are designed to reduce carbon emissions, but they also send a clear message. The era of fossil fuels is coming to an end in California. As a result, the state has emerged as a global leader in electric vehicles, solar power, and large-scale battery storage. California is proving that economic growth and environmental responsibility can go hand in hand. New jobs are being created in green industries, and innovation is thriving, showing the world that a sustainable future is possible without sacrificing prosperity. However, these same forward-thinking policies are also forcing out traditional energy producers. Oil refineries are closing, and workers are facing uncertain futures. This creates a tough balancing act for policymakers, who must weigh the benefits of innovation against the real human costs of transition. The closure of refineries is a direct result of California's aggressive green strategy. These changes have sparked heated debates across the state, with some arguing that the pace and cost of this transition are too high, while others insist that bold action is necessary to combat climate change. The question remains: is California moving too quickly, risking economic hardship for families and businesses? Or is this disruption a necessary step toward a more sustainable and resilient future? The answer is far from simple, and the stakes are incredibly high. Ultimately, the choices California makes today will not only shape the state's energy future, but could also serve as a blueprint for the world's transition to clean energy. The world is watching, and the outcome here may influence global policy for years to come. California stands at a crossroads, its energy future defined by choices made today. The immediate challenge: stabilize fuel markets and protect residents from price shocks. Long-term, the state is doubling down on clean energy, electric vehicles, and renewables to break free from oil volatility. The journey will be tough, requiring balance between environmental goals, economic realities, and political pressures. How California manages this transition will set a precedent for the world. The state's progress offers hope, but the risks are real, and the debate is far from over. Innovation, resilience, and public engagement will be key. Share your thoughts below. This conversation is just beginning.